Hey traders, it's 4:30 in Chicago. We are on the 31st of May. Let's begin our double shot, the daily video. Up here for Elliott Wave Cafe. We finished off a month of May, and we're going to take a look, just, very simple charts here. Look at the counts just on the S&P 500, NASDAQ, and the Dow. Just to kind of see what's been happening and if we need to revise anything on those counts. And I want to take a look at them from the bearish perspective as well, just to kind of refresh our memory on kind of what everything stands with the markets overall, because you can notice, right, more and more that as soon as some of these larger stocks are pulling back a little bit in here, the markets are having a little bit of trouble. We have some extremely weak sectors. So out of 11, we have about 7 or 8 that are not doing that good, and 3 of them are actually kind of carrying the market. So again, there is that big split in the way the market participates here. And the average price of a stock in the United States is still, the average gain, it's still, flat, if not negative, I think since beginning of the year. So, there's a lot of issues, but there are, things that are obviously positive, and we continue to kind of look at those, thinking that we do have a major low up here in October. Now, this month, I think we were barely up, on the S&P, maybe 25 basis points or, maybe 30, something like that, between 20 and 40 basis points. We kind of closed off this month in the S&P 500. So almost, almost nothing, almost flat. You can see we have a doji here. And we had a pretty good month of January. I'm sorry, what is this? So if this is, I'm going backwards, right? May, March, right? March here. And then we go April and May. So, this was a pretty nice bullish hammer, and we closed above this 150-day moving average. Then we had another pretty decent bullish month, but then the third month in here, we're struggling to go. So I'm just a little concerned about the way this looks, right? You start something, and you're supposed to explode to the upside, but instead you're kind of, falling back a little bit in here and create a bunch of indecision. These August highs from 2022 were never really taken out. So that's 43.25. We're still hovering below 4,200. The picture remains okay. As long as we're above this moving average, I think, we can still consider this a pretty decent uptrend. So, mind you, if we get any setbacks, if we stay above 4,000, I think that would be good. Or if we close by the end of, let's say, the month of June above 4,000, I guess that's, there's going to be an important development. But we'll see. We'll see how the month of June unfolds. But let's take a look at a few counts. Just wanted to kind of give you a clean look of how the monthly it's shaping up. You obviously have this trend line that's been taken out. This was, kind of what guided the market lower during 2022. It kind of came back here, broke, came back, retested it, and then, we push higher. So now we have, we have a nice series of higher highs and higher lows. But we're still far from being out of the woods. Now, since I'm on the monthly charts, let me just continue to go and to kind of clean up the picture with the candles, and then we'll go to the counts. So the S&P, let's go through the NASDAQ. And today was a little iffy in here. 70 basis points we dropped. We had a little bit of a pullback in Nvidia. I think Microsoft sold off too. So we had some little bit of weakness here as we were kind of finishing up the month. Maybe some profit taking. Let me just kind of get these labels off. So we have these labels on the regular counts, and I wanted this moving average to show only below 1 month in here. Okay. So on this one, right, you can see again the same kind of trend line. Let's just get rid of it. We climbed above the August 2022 highs very nicely, and we closed pretty good above it. So this candle in here, it's not, it's as bullish as it gets. It's got almost a perfect body, with equal tails. So it could be considered something, that might have. That might continue to elicit more buy in here, right? This is 1, 2, 3, 4, 5 months of non-stop buy, basically since the beginning of the year. let's get rid of this one too as well. So a much better, let's say a much healthier picture here in the NASDAQ. Mind you, climbing back above the 61.8 retracement of this decline, which is good, you know, but coming a little bit into some overhead supply. Just look at this back here, and I'm going to raise this higher just a little bit. And you can see, right, you had a couple of months that just stopped above that level, and then, you know, if I put this higher, I can even do two of them, right? There is, let me just do it with, you know, with the price, so we have that as well. You know, so that's almost 14K. You know, we have 1, 2, 3 months that were below that 14K zone. So be below that 15,000 zone. And probably that's going to be the next level where we're going to try to maybe finish off this initial move and then maybe sell back. Now this 13,720 will be resistance, you know, if we're going to dip lower. And then we're a bit far, you know, from this moving average. And we got to wait for it to catch up. You can't really, you know, straight up just, you know, get an immense move higher. I think this one kind of has to participate, you know, just kind of what you have in here, you know. So I would like to see more of this type of buying where we're creating some kind of a trend rather than, you know, than a big explosive move that gets too far away from the 150-day moving average. So again, we're getting to the part where things, you know, start to look a little, you know, just slightly, you know, a little bit problematic for the NASDAQ, for a lack of a better term. You have the 78.6 around 15,149. You got this resistance up there. So, you know, we're getting into the froth territory. We're getting into the levels where, you know, we might have some big fights into the XLK, into the NASDAQ, into the Qs, stuff like that. So I would be cautious, you know, getting too aggressive this index. Now, let's take a look at Dow Jones as well. And, if I can find it, I got a lot of tickers here. DJI. Let's go on a 1 month. Hide this below 1 month. And get rid of the labels as well. Here we go. So back here, what do we have? We have a month of May that was pretty fully bearish. You know, we had a nice hammer after a correction here a couple of months ago, right, again in March. And then, you know, another bullish move in April. And now we're coming back. But this back here, right, this formation up here, I think it's very important, right? Because this is where the market said, no more, you're done going bearish. And you created this huge bullish engulfing, you know, and this kind of tells you that, you know, this low should not get challenged again. Now, back here, you know, you had the move, so that we're looking at that at a wave 2, and then another 1 and another 2 back here. But that means that we can't really have a lot of room to the downside. The next month here, the month of June, it really has to kind of go and try to break above this one, you know, to give this hammer, you know, validity, and to try to break above this price levels. Again, I mean, there's some big zones in here too. Let's see. You know, and you see how fun this is. You know, you go back here and you can see, I mean, a couple of monthly closes, you know, right there, about 34,726. Well, where did the Dow go? Right there, and it wasn't able to break through. So these are called like key zones, key levels, just like, I'm going to do a copy paste here, just like this guy is right there. You know, that's 32. I mean, you got this month, this in here, right? You can just kind of pick them. And you can see, you know, how key these levels are. And the moment you break below them and you close below them, then the danger becomes that you're going to continue to move lower. So that's on the Dow Jones. Okay, now quickly before I extend this video too much, let's go and take a look at the counts, and we're going to take a look at some bearish. Let me just get a sip of coffee. So after this correction here as a wave 2 into 34.90, we're thinking impulse, possible flat in a wave 2. And now we're beginning to move higher in a wave 1, 2, and then let's go to the upside. Now look at this much. I mean, there's so much chop in here. Again, that doesn't really give me a lot of confidence. I would like for this to kind of be some kind of a 1, 2, 1, 2, and then break and go to the top of the channel, you know. But, you know, the market does not participate. It's still very hard. You can see you can barely close above that 4,200. So I'm thinking, what if is this? And like I said into last night's update, this is just, you know, just a little bit of touch on that. What if that's wave 1, then you get an A, B, and then you still get a C here, and then you go, you know, and that's that kind of drop once again into, you know, more of a proper fib in here, and then you and then you can push higher. Otherwise, you know, or you have still some kind of a wave 1 that's still forming, and that's an ending diagonal here, right? And you have your 1, 2, 3, 4, and then that's your ending diagonal here. It has to be smaller than wave 3, and then you come back in a second wave, and then you go. So you can see I kind of have 2 counts that are saying that it's possible that you might be pulling back, and then only one that's more aggressive that says you're going to get some kind of a, you know, wave 2 was done right there, you know, right at that low, and then from there you got a series of 1s and 2s, and then, you know, you can push back, and then you need to break much higher. But we'll see how much aggressiveness we get from the month of May. But from the way the stocks are behaving underneath the surface, you know, this is kind of starting to, my degree of confidence in this is starting to kind of get decreased. I would have liked for this to kind of break and continue moving towards 4,300, right? That would have meant that a lot of stocks are participating in this, and maybe not just the big ones, but we would have had more participation from financials, from materials, industrials, you know, healthcare, what have you, to kind of help this market get above 43.25, and yet it's still struggling. So that's the bullish case. Now let's take a look at the bearish case. Let's see kind of how much more it's still valid in that. And I haven't modified anything back here. And I bet you that the bears are looking at this, you know, kind of in this way, right? Where you're going for a wave A in here in a 1, 2, 3, 4, 5 in a leading expanding diagonal, and then you're doing a B wave into the 61.8. Okay, either B or a wave 2, and then you crash lower. So that means that, you know, we would have, let me just, I was trying to grab these numbers out of there. Okay, that means that you would get, let's say, a C wave again back maybe towards the bottom of this channel now that you've rallied quite a bit. And that would be again somewhere just below this low towards 34, 3280, maybe 3200 if it really wants to be that deep. The problem is, how do you count this B wave? You know, because that's got to be a corrective move. So the only way you do that is through some kind of a flat formation, I guess. You know, but it would have to be a little bit inventive. So again, you're going to want a B and then there's some kind of a C wave in there, something like that into the 61.8, and then you break lower in a wave C. Now imagine if we're getting a C wave down. Those C waves are not, you know, those are not pretty. Okay, they're not like this. I mean, this was ugly, but a C wave can be very sharp. I don't know what can trigger that. You know, it can come from a lot of places in this world. You know, we don't know. You know, what's around the corner, right? Everybody tries to anticipate, let's say, you know, what can, you know, let's just say, you know, it's a debt ceiling, it's everything. But I think, you know, it's something that we don't know, you know, that could actually, you know, hurt this market if it is to kind of get something very, you know, strong on the bearish side. So let's double check that. Okay, we're going to go with this, and you can see, right, 61.8 right there. I just checked the fib. Instead of doing the automatic way with a shortcut in motive wave, it's an you know, Alt B, and that shows you kind of what that is. Okay, so we're still below the 61.8 right there, right? That's I think that's an important development. Usually B waves are, you know, 38.2, and then, you know, the next one, yeah, you can get it to the 61.8. It's a little high. I mean, the other way is that that's an ABCX and that's an ABC, and you're traveling higher to kind of give it a bit more proportion, right? But if that happens, you're probably going to get into, let's say, 78.6, which is at about 44.97. That's what that would be, 44.97, which means that you would take the top of this fourth wave and only then maybe come back to the downside. So the bears, you know, still have a little bit of an argument here. Mind you, you know, it's a little tricky. You know, with kind of this flat and this kind of awkward C wave. Now, if you break below this guy right there, okay, and even if you break 78.6 of this move, I would start to be worried. that the next leg lower has begun. Okay, so 4,000 will start to kind of flash warning signs. 3,900 would be where, you know, it's like, you know, the sirens kind of start sounding. And then below 3808, you know, you get the full-on war, and things can start to kind of break lower. So that's on discount like that. All right. Listen, I don't make the rules. I'm just kind of showing you the other side. Now, let me show you this guy in here. That's, you know, this is an ultra bearish count, you know, primary cycle, super cycle, grand super cycle, you know, crazy stuff, Elliott Wave International kind of type of, you know, bearishness and, you know, end of the world type of stuff, right? We're all going to transform in zombies and you know, I don't know, robots will take over, something like that. I tell you, I'm tired, so I'm having a little bit of coffee here, and but I'm still going to go for a walk after I finish this up, and then we'll write a piece later on this evening and see what happens with the debt ceiling. I think there's a vote tonight. So now, let's see. That would be, you know, again, instead of being an ABC, that's a 1-2. And again, you know, what's an ideal place for a second wave? That is a 61.8. So we wanted to get above that guy. It's very important. That's 42.60 of this entire decline. Get me above 4,500, and I think then we got a much better chance of, you know, this thing continuing to push higher. So I'm keeping this in mind, okay, and I'm showing it to you here as well, and you see what the triggers are. Now, I don't subscribe to the idea that this will be a move at this third wave down and you're going to revisit, you know, the COVID lows. I think that's, you know, quite crazy. I don't know what would take for that to happen, you know. So in between those, I'm more open to the idea that, yeah, you know, I would, let's say, accept a C-wave decline in here, based on kind of what you see kind of happening underneath the market. And if these stocks are not recovering, you know, there's a likelihood that this could happen. In terms of sentiment, you know, I think we've reached major low in that October, and, you know, since then, you know, we're climbing a wall of worry. And if you look back, let's say if you take, you know, even if you take this low back here, it's something similar, right? Where you have a move up and then down again and down again, and then you go. Or if you start from 2016, right, you go up just like you did here, and then you do one more, and you kind of keep climbing a wall of worry here, and then, you know, that's what happens on the other side. I mean, I don't remember exactly what the talk was here, but I would imagine that this would have been, you know, something to say, oh my goodness, you know, this is just a pullback and we're going to roll over, and instead you kind of continue to climb higher. You look from here, from 2011, 2012, right, you go up, come back down, and you create those higher highs, higher lows, and then you continue to push higher. So this is possible, right, that you're doing just a, you know, maybe just another simple pullback, and then you go up and then back, and then you start to accelerate, and you go and you continue to push. But we got to get back above that. All right, so that's S&P 500. Now let's quickly take a look at the NASDAQ, and let's start with the bullish kind of narrative in here. Let's go and see what I'm seeing here at the 1 day, right? This is the idea that a wave 2 is done, and you know, we're above those highs, those August highs. You crack the trend line. You got a 1-2 again, a leading in 1, down in 2, another 1-2, and then that's another 1-2. Okay, that's part of this third wave, and we can decompose this as a 1, 2, 3, 4, 5. So this is what we're getting, right? We're probably 1, 2, 3. We're probably done with this wave 3. We're doing a 4, just like I was warning a little bit on that. Maybe, you know, this will happen June, July. You never know, right? Just kind of come back down a little bit, and then maybe in the fall, you know, we pick up and we go again. Let's say you're finishing off July, maybe I've thought of July. You're rallying up until the end of July, then you pull back August, September, and then, you know, after October or something, you kind of start to push back to the upside, and you do, you know, something like that, and we're still working like this third wave. That would be where it would travel 261.8. Let's take a look at this guy. Let me just get rid of the cursor. So this wave 3, I'm going to do some, so now you see there, it's it sits at about, you know, ideally 161.8, it's about 15,858. So that's why I think it's got more room to go. Then you do a 4, and then you do a 5. Now let's see this wave 3 back here. Let's calculate this guy. Okay, well that's, you know, that's a little bit on the equality side between this one, between this impulse and this impulse, just a little bit higher. Not all the third wave will hit that one in 161.8, right? It's, you know, it's not a requirement. It's ideal, but you know, anything past 100%, I think it's pretty decent. Maybe we're gonna, you know, drop a little bit in here. Maybe there's still another small fifth wave that needs to happen. Maybe it'll go up to 15K and then drop in a fourth wave or something like that. Okay, so that's the bullish case. That's done, and you're doing a 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, and 5, and you know, you continue to go, and eventually you take those highs out of there. Now, on the bearish side, let's start with this one that's a bit more, and listen, I haven't touched it since I've done it, so this is what it is. You know, the bears were expecting this as a B wave, up in 3 waves, and then back down, right? B versus A, 78.6, we cracked above that one. The moment you cracked above the 78.6 is likely you're moving on the reverse fib. So let me get rid of that B wave. So now you can't really do a B wave anymore here, you know. So what's going to happen now is going to have to delete this and again go, let me just get rid of that. We're not going to do it as a WXY anymore unless you want to do this as a X wave flat, but I think that's, listen, I think those things are just kind of too, you know, too complicated, too, you know, we like to keep things simple. So we'll go, no, okay, we'll delete this instead of a W. You know what, let's just do it in an ABC. So we'll go take a correction and just go AC. I don't even care about that at the moment. So now, you know, we did sell off. We sold off like what, 35%? In 37% in the NASDAQ. Yet we haven't hit, you know, the 61.8, which is at 95.74, which is fine. We don't have to. And we started to rally. Now, if this is a B wave, guys, this is going to be, you know, the mother of all fake outs. Again, we will look at this as some kind of a, let's just do it, a decompose it, a leading diagonal there. Just an expanding leading. And now you go up. A, B, C, X, A, B, C. See, this is kind of trying to force, you know, a little bit of a, you know, of a corrective type price action into what looks to be a pretty good impulse. You know, I've seen, you know, impulses that you know, end up being corrections, because that's how kind of, you know, how life is, right? It's not always textbook, but we're just trying to kind of look at the odds here. Let's see. Let's go and see how far are we. Well, we passed the 78 point. We passed the 61.8. We passed 60. We passed 61.8 at 13,990, and 15,149 is where we have 78.6. You know, we're still in a, you know, in kind of the fighting territory here for a B wave. To tell you the truth, it's very high. I don't really subscribe to a B wave being that big unless you're getting, you know, some kind of a massive sell-off. Maybe, you know, not that I didn't see them, but ideally when the market is, you know, in a rush to kind of correct like that, you know, it does an A, a small B, and then you push back down. This one, it's a very high B wave. And I don't think it's an X, because you can't really make, you know, this, you know, have some kind of a 3-wave decline in here, right? You would have to go, well, the only way you can go in a 3-wave decline is like in the bullish count in an A, B, C, and usually X waves travel in the area of the prior B wave, and this one kind of pushed higher. I hope you were clear there. But, you know, what would start to kind of worry me here, that it's probably a B wave? Well, you know, a couple of things. First, right, if you're looking at the 1, 2, 1, 2, you know, 1, 2, 3, 4, 5, that means that this high in here kind of has to stay untouched. 13,188. If you break below that guy, you know, we're starting to kind of get into some issues. Then this low back here, if that gets taken out, right, then you start to kind of, then if this happens impulsively, then we're kind of starting to worry, and then Also, you know, you have some kind of a trend line, and if you break it, then things can start to look a bit more ugly. So we're far from that, and we'll see what happens here over the next month and kind of how the market behaves. If it passes 15,149, I think that we can look at the reverse fib of this entire move, and we can start to travel towards 20K into the NASDAQ, okay, once we pass 78.6. So that's discount, and then let me show you this guy in here, right? That again, that's the ultra kind of bearish. See, and there was the wave 2 there for a while, because that would have been ideal, 1 2 1 2 in 3 waves, and then go lower. Now it didn't, which means that that's not okay. You also passed the origin of the wave 1, so that becomes invalid, which makes you push this higher as a wave 2, drop this down, unless you want to do a flat. But I just showed you that maybe that could be counted. So this alternate 1 becomes actually primary now, and 1, and then you're doing a wave 2, which is, let's say, far from ideal in terms of kind of how it behaves, and you know, it's kind of impulsive. But that's where we are, okay, in terms of the bearish count. And again, this one, if you look, I mean, it would mean that this is a major top. You know, we're still in the bull market in here. You have a nice hold of the trend line. So for all intents and purposes, this should be bullish and should continue to travel towards the top of the channel. Mind you, we gotta, you know, get over some of these. If this move here would be a bit more clearer in terms of, you know, being corrective versus impulsive, I guess we would have, you know, a whole lot more confidence that that's probably not a wave 2. But the fact that this one can be counted both waves, it's kind of what screws everything up for a lot of, you know, Elliott wave traders here and analysts, because you can kind of read both ways into that. So let's see kind of what happens there with that, and if we're able to pass it. Now, quickly, let's go and take a look at the Dow Jones Industrials in here and see kind of how that looks. So the bull count, we already know. We're looking, and this is, to me, it's kind of an ideal, you know, move. We dropped in 3 waves in your ABC. Then you do a wave 1, you know, beautiful. Let's say, you know, you can even have a flat or just a simple, let's say, WXY. Straight into the 50%. We didn't reach a 61.8 on there. So let me just kind of compress those. And now again, you know, here's what happens. 3-wave move down, you go up in an impulse. So it's almost textbook what's going on. And then, you know, you come back. Actually, let's not do that. Let's just do it with an impulse, right? This is what I would like to see. Wave 1, wave 2, 3, 4, and 5. So now this wave 2, you know, it's into the 61.8, which is kind of where you want it to be. Which means that once you're passing, you know, somewhere up above these levels, right? Because that's by that time you press above 32.6. There's some resistance, some horizontal lines. You have a trend line in here. Once you pass above that, you know, we should be on our way higher here for the wave 3. And no point in really doing the math yet for the 3rd wave, because, okay, I just visually put it up 37,461. If this is the end of the wave 2, if it wants to travel a bit lower towards 78.6, I guess, you know, that would change. But if you're getting towards 78.6, you know, you're running the danger of breaking here. And if you break here, then you can still have a wave 2. You're familiar with that by now. And this becomes an X wave. Okay? So you have an A, B, C, X, A, B, C, and you do a complex correction. This wave 2 moves here, and then you go. But it has to be corrective. It kind of has to stay, you know, within kind of this type of a pattern. And it would be way too big. I mean, look at this proportion, right? This is what I want to see. This is it. Wave 2, you know, wave 2, 1, 2, let's go. Let's take a look at the bearish, because the bearish is much harder on the Dow Jones than it is on you know, on the other ones, due to this massive rally that you've had here. So let's see, I have this one, 1 2 3 4 5. So A, then an ABC for a flat in a wave B. Then you had the chance for a 1 2, and this has got to be another 1 2 out of here, and then you got to crash. Okay, So that's one. Quite unlikely to start to kind of hope that that's a, you know, this, what it looks like a three-wave move, to make it into some kind of a 1-2, 1-2. You never know, but it's not what I would kind of necessarily bet on, right? It would be kind of surprising if that happens. Plus discount in here, it's a little bit ugly. But that's one way to kind of look at this and say, okay, what's going on in here? You know, how can we still move lower based on the pattern that we have on the Dow Jones? So again, not a high confidence setup. This one in here, I guess if we would move wave 2 and you would go wave 2 in here, I just kind of get these guys out of the way like that. Do I have anything up there? Yeah, I got a bunch of finishes. So how would this look? I mean, you would have to do it as a, again, as a leading 1, 2, 3, 4, 5. Okay, so that's probably, let's say, you know, have an expanding leading diagonal here as well, and then you got a wave 2, sharp wave 2 into 78.6. That's the retracement. And the way you kind of started again is through 1, 2, 1, 2, because you have no leading in here. You got nothing kind of happening. And I guess, you know, under this scenario, we could count it the same way. Instead of that, this A, that's right here, you know, it would have to be placed here instead. This becomes the leading diagonal in wave A. You're going up in B, you know, and then you crash lower in a wave C. And, you know, I've seen in oil, I don't have time to go to that chart right now, but I've seen, you know, and that was a little awkward, where basically that B wave or that second wave no, the second wave couldn't have been, but I think it was a B wave because it was a triangle. So you would go in a wave A, B, C, D, and E, and you did some kind of a triangle like that in oil. I remember back in 2015 or something like that, maybe earlier than that, and then you crash lower like that. I swear to God, I think oil did that. Now I gotta go find it. So there is that possibility that could be a wave A, and then you have some kind of an ugly triangle in a B wave, and then you come back down. Let me go and take a look at the futures. Maybe I have it over there. I mean, it's been a while. It might be in my course, that count. Let me see. Maybe I have it here. I mean, it's been a while since I should have that saved somewhere, but I don't have a lot of time to kind of go through it. Let me see if it loads up here. It's maybe a lot of data. That's why it takes a little while. Let me pause the video. I'll be right back if it loads up. Yeah, I had one that was a bit more detailed, but you know, I found this one, so no big deal. But this is the move back there, right, where you kind of go up. Let's say that's an A, and then you have a B wave in a triangle, and then you drop down in a C. So, and I guess this whole thing, you know, it could have been a triangle. So it's in a, you know, let's say it could have counted like that, like in an A, B, C, D, and E. Okay, so you know. But this back here, right? A, B, C, D, and E, and then you sell lower. So that's kind of how you can have an A, B, C down. You know, with this being what looks to be like a triangle in a B wave position. If you look at this, you know, as a triangle in a wave B, that means that you know, that's an A back here, and that's an A triangle B down in C. That's kind of how that goes. But anyway, a couple of interpretations with the oil. This chart here, it's all messy and it's commodities and whatnot. But basically, you know, there's always that chance that even though if it looks corrective, you know, you can still kind of break apart in some kind of a, you know, weird triangle or flat or something like that, and you're just kind of rolling over. So, you know, I never slip on you know, a three-wave pullback, you know, being 100% a corrective move. It could be part of something else. It could always degenerate right into something nasty. So, you know, I usually trust them. I trust, you know, three-wave setbacks, but again, they kind of have to have a little bit of confirmation with the break below those levels, below the B-wave highs, and then, you know, try to shoot back to the upside. So always be on guard. And I'll leave it at that, guys. I hope this was, you know, helpful to kind of give you an idea of what I'm seeing overall, and kind of what are some of the levels that we need to kind of keep an eye on for, you know, for this market to kind of guide us towards the bull side or towards the bearish side. You know, I've become just slightly a bit more defensive here in my positioning until we're just, you know, kind of getting getting through the month of June. I still remain pretty bullish, but I'm just cautious because, you know, I notice, you know, a little bit of a froth in the NASDAQ, and all this AI talk kind of got to me a little bit on the, you know, everybody kind of getting excited about it. And I know that the market has a way of punishing that. And that was one of the reasons why, you know, let me just exit the drawing and I'll show you. That was one of the reasons why, okay, well, let me go back here because I think I can. It was one of the reasons why, you know, the SOXL, you know, we got out of that move into the triple semiconductors because it started to kind of sound just very, very frothy as we were moving up. I'm not saying it's over, but you know, it's a little cooked in here. And if we look at XLK, you know, same you know, same kind of a thing, right? It's much higher, right? Even above these highs. But nothing goes straight up like that, right? You need to have a little bit of a breather. So what that means is that, you know, there could be some underperformance from these sectors. And you know, since there's a lot of big stocks in here, you know, that could actually put some pressure on the market. So that's why we got to be just slightly careful on kind of looking, and, you know, judging this market. All right, guys, I'll talk to you a bit later. Bye.